Hello everyone, my name is Deepak and I'm a tax code advisor, and today's tax question is about family board meetings. So let me jump onto it. Let me read out the question, then we'll break it down and we'll discuss it together. So the question is, Deepak, I would like to conduct a family board meeting and I have a lot of expenses like travel, meal, hotel. I would like to write all of those against my 2024 income. What's your take on it? What should I worry about? Can you suggest how to structure a board meeting? What kind of paperwork I need to do? Do I need to get something drafted by an attorney, and so forth? All right, so there's a lot going on in here. Um, but in the essence, his real question is, how do you structure a board meeting, and can you write it off against last year income? So as far as writing off against last year income, generally speaking, I like to record expenses in the year they happen. So let's say if you're let's just say all the expenses that you talk about are legit and you are able to claim them on your tax return, then you should technically be recording them in 2025 because that's when the expenses happen. So sure, you can have a board meeting, but I would not recommend you write it off against 2024 because expenses didn't happen in 2024. They happen in 2025. So technically speaking, you should be doing your board meetings, before the year end. Can you have more than one board meeting? Absolutely. Can you have 2, 3? Whatever your business required. You know your business better than anybody else, so you can have more board meetings. Nobody's stopping you from doing that. All right. Having that said, let's dig a little bit deeper into these board meetings. Now, normally, if you're my client and we go through a comprehensive tax consultation, then we'll certainly talk about this strategy and I'll hold your hand and I'll walk you through how to implement it properly. Make sure you understand what are some of the risks, what are the rewards, and and how to do it properly. So that's my job. So board meetings is usually underutilized for most part. Why? Because they're not really that straightforward. There's a lot of nuances when it comes down to board meeting, and people don't understand that. People do like to do simple things. Anytime there's a little bit of a complication, people kind of shy away from that. But technically speaking, if you have any kind of business, and that could be your S Corp, your C Corp, maybe you're getting a 1099, maybe you are an influencer and generating some income from YouTube or some other method. Maybe you're getting sponsorships from other people. Maybe you have an investment property. Maybe you have some rentals. So many ways you can make extra income in this country. But as long as you have that extra income coming in, technically speaking, you have a family office, right? Because if you think about it, your family has a lot to do with your small business. For example, they advise you on, when can you do certain things. They advise you on how to spend your money. They advise you on how to grow your business. You come home, you're talking about your business with them. I mean, at the end of the day, these family members are your advisors, right? So why not use them in our business to get a little bit of a better tax treatment? Sometimes people go like, well, isn't that too aggressive? Well, it can be if you make it too. I mean, if you're making a $20,000 income and you're showing a $20,000 board meeting with all bunch of expenses, yeah, that's crazy. Like who would do that kind of meeting? But if you have a $100,000 business and you want to go with your family to Las Vegas to discuss about your business, then all of a sudden that does look legit. So it really all depends on individual business. So for time being, to discuss this strategy, forget about the part whether it's ethical, fair, or not, right? Because that is so unique to each circumstance. So I don't know who you are, what your situation is, so I can't answer that question. Obviously, when you come to us, we'll have a discussion about that and we'll walk you through what's fair in my opinion, how should you look at things, what are your risks, and what are your rewards. So my job is to educate you. At the end of the day, you make a decision. By the way, that is the difference between going to a tax prep firm versus an advisory firm. Obviously, we do tax prep as well, but before doing tax prep, we are advisory firm. Our job is to put it down on the paper for you, black and white. Here are your options. These are the things that we're dealing with. What would you like to do? All right. So, board meeting. First of all, if you have a state registered entity, like you're an LLC, S Corp, C Corp, then you should certainly have board meetings, even if it's not for tax protection purposes. I mean, tax saving purposes. Why? Because by having a board meeting, you're actually making your entity even more legit, right? You're telling, if somebody looks at your company, there is a structure as to how you make a decision. When you register that LLC, when you register that S Corp or C Corp, essentially you went out there and you told the world that, hey, this entity is different than me. But how does this entity actually makes a decision? When you have a board meeting, that actually gives you more credibility that you are actually operating that entity as a separate entity. So it's good for you. Number two, when people have, now if you're Schedule C, that's okay. Schedule C is very simple. You don't really need to have an entity, and we'll come back to it. But since I'm talking about LLCs, S Corp, C Corp, and like I said, this even applies to people who have investment properties, applies to you as well. Oftentimes, these people will not be up to date with state, especially if they're living out of country. They might not know what are the requirements for the states is. They might have a requirement that they need to update certain documents every year, every 2 years with the state. They might need to find a tax return, even if they had no income. So number one thing is we need to take a look at our entity and make sure that we are still in compliance. So if you are our client, obviously we'll help you do that, but most other tax firms are not interested in doing that. Number two, well, if you're going to have a board meeting, it makes sense that you have a proper operating agreement, you have proper bylaws, you keep a track of all the shareholder minutes, right? So those are some of the basic requirements to have a legal entity, but majority of the time, people are missing that. Then comes the most important part. Well, who owns the company and how do you even own it? Is it a membership certificates or a stock certificate? If you are a S Corp or C Corp, if you're an LLC, then you will have a membership certificate. Do you actually have it? Oftentimes, people will come to me and I'll ask them, and they won't have it. Well, without the membership certificates, you technically, who is making the decision on them? So there are like a lot of these nuances when it comes down to company, and oftentimes people are missing all those. But anyhow, let's assume for a second that you are in full compliance. What do we do? Well, first thing you got to do is pick who should be your board members. These people can be your advisors. By the way, I'll be happy to be your board member. That's not a problem. But it could be your spouse. It could be your kids. It could be your parents. It could be other business owners, it could be people you rely on advice for. Maybe I have an uncle in Florida and I like to go visit Florida quite a bit, and maybe I'll put him on my board. So anytime I go to Florida, I can ask him for advice. Nothing wrong with that. Maybe you have teenagers. Maybe you have now. Sometimes people, and this is where it gets a little bit tricky, right? Sometimes people just take the simple thing and make it overcomplicated. The other day, I had a client who was like, "Oh, I have my 4-year-old as a board member." I'm like, a 4-year-old as a board member? What advice can you get from her? Now that's just too crazy. And I don't know, what expenses are you trying to write off for her? Like, are you trying to write off the milk, diapers? What are you trying to write off? So anyhow, sometimes people go a little bit too crazy with it. But in my opinion, if you have teenagers, a little bit older kids, I think they can be a great board member. Now, does this mean that if you have younger kids, you can't pay them? Of course not. I mean, they can certainly help you out in the business, but that's not what I'm talking about here. We're strictly talking about a board meeting and who can be on your board. So I'm saying if you have younger kids, you put them in a board meeting, that just doesn't look right. It needs to be a little bit older people. So I would say teenagers or older would make more sense. The board members, do they have to own a business? Should they have a business experience? This is another common one people ask me. Like, hey, you're saying that, hey, my teenager daughter or son can be a board member, but they don't own any business. They have no idea how to run a business. You're asking me to ask them for advice? And I'll be like, yeah. They don't have to have a business per se. These days, kids are smart. They learn about HTML, CSS. They're learning about AI. Your teenager kid probably know more about Instagram, Facebook, TikTok more than you do, right? These kids have a lot of information. So can they advise us in our marketing? Can they advise us in helping them understand who our customers are? Of course they can. So no, these board members, they don't need to own a business. They're there to provide you guidance. Now, do you have to act on their guidance? Of course not. You don't, right? You collect the information. At the end of the day, you are responsible for running a company and you make a decision. Just like you come to me, right? When you come to me, you ask me, hey, Deepak, should I do it this way, that way? I mean, I can't tell you what to do. My job here is to educate you. I'm like, okay, this is how it works. This is the risk. This is the benefit. And I leave it up to you what you want to do. These guys work exactly the same way. Their job is to just give you guidance and then you do what you want to do. Another question is, can I pay for these roles? Because technically they're not doing a job. They're not really working for me. Can I actually pay them? Can I pay my uncle? Here's a good example. Let's say I have an uncle in Japan or Philippines or Singapore or India or England. You can put him in your favorite country if you like. And, and I need to send him $1,000. Well, one thing is I can just gift him $1,000. But the other thing is I can make him a board member on my company and I can share some information about him. Hey, uncle, I have this website. Can you please take a look at this website and review it and let me know what you think about it? How can I grow it? Can you give me some advice around that? All of a sudden, I'm paying for consulting, right? I'm paying for that advice. That's exactly what happens. So absolutely, whether you have one board member, two board members, five board members, 7, 10, I don't care, depending upon what kind of business you have. You can certainly pay these board member a reasonable payment for providing you advice. Now, is it possible for me to travel to that country and ask for advice? For example, if I ask him, hey, review the website, can you please give me an answer? He can certainly do that over the phone or maybe send me a quick email. But what if I make it a little bit more complicated? What I say, what I'm going to do is I'm actually going to travel to, let's just say, Switzerland. I like Switzerland. I'm going to put my uncle in Switzerland. Well, it's my choice, right? It's my uncle. He could be anywhere where I like it to be. You can put your uncle wherever you like him to be. Let's say Switzerland. And I say, look, I'm going to come to Switzerland and I'm going to spend a week there. And we're going to talk about this business. Is that legit or not? Okay. So the answer is, it depends. Because let's say if that travel is going to cost you $5,000 and your business is making barely $10,000, then that becomes a little bit more questionable. It's not really a sound business decision. See, IRS cannot dictate you what you should or should not do. But IRS does say it needs to have some common sense. Because if you're going to make these bad business decisions, you're not going to survive, or you're trying to cheat the tax system. So you have to be very careful what you're really trying to do. But if you're making a decent amount of money and you go there, maybe you take some pictures and you do some other business there, all of a sudden that travel becomes a business travel. And when it becomes a business travel, we can write off our flights, we can write off our hotels, we can write off our meals. All of that can become deductible. But key thing to remember, that means the purpose of that travel has to be for business. That's the key. Now, if you're going there to ski, now again, let me clarify. Doesn't mean that you can't ski. Doesn't mean you cannot go to places. You can do all that. There's nobody stopping you from doing that. The primary purpose of it has to be because of business. That means you have some sort of documentation in advance. You have sent some emails, communication. You have planned some meetings for each day, and you're actually getting some business done. And that business could be as simple as asking for an advice. There's nothing wrong with that. Now, Switzerland, I purposely picked that extreme example because when you travel internationally, requirements for travel write-off are a little bit more stricter, but that's a topic for another day. But, your travel could have been to Vegas or to New York or to Colorado. So wherever you go, that is possible. But the key thing to remember is you need to have proper board of advisors set up in your company. Even if you're Schedule C, like if you're 1099 or realtor or something like that, you can still do all of this stuff. Nobody's stopping you. I started the conversation with the entities. That's why we kind of got a little bit sidetracked. But the same rules apply to everyone. Okay, no problem at all. So the documentation is very, very important. Who are these board of advisors? That should be established. When you conduct those meetings, we should have those meeting minutes. When you're communicating with these board members, when you're inviting them, agenda, all of that should be clearly down. I'm kind of going through fast, but for our advisory clients, we have 1 hour session specifically dedicated to this, where I kind of hold your hand and I'll walk you through how to do it properly. Okay. What can you do at these board meetings? Well, like I said, you can ask for advice. You can, for example, talk about marketing. You can talk about sales. You can talk about real estate investment. You can talk about growing your business. You can talk about debt management. You can talk about business performance. You can talk about employees. You can talk about how to grow your business. So there is a lot to talk about. In matter of fact, it could be as simple as, how are we going to become more financially stable? What are going to be our goals? What are we planning to do? Where do we expect this business to grow? So there's a lot to talk about, seriously. I mean, I think we just don't take enough advice from our own family. Otherwise, I think we'll get a lot of good information out of there. But in return, what do you get? You get tons of deductions out of it. You can write off home office deductions. If those people are getting involved with you and you're actually paying them, even they can write off their home office deductions. You get a lot of business expenses. Perhaps you're even using your car to go there, so you might even get the mileage of that as well. So there's a lot that can be done. We have a big checklist that we provide to our clients. So again, advisory clients. So if you're an advisory client, then we'll provide you. That kind of gives you how that is all done. But at the end of the day, what you want to do is keep a corporate book. And if you're Schedule C, then just keep a log somewhere and keep it with you. Do you need to submit it to IRS? No. Do you need to submit it to your state? No. It's the document stays with you, and the reason why you want to keep that is just in case something goes wrong and one day IRS questions you, hey, why did you pay such and such person $500 or $1,000, or why are you writing off this travel? You got to be able to prove it. That's why I said we keep that documentation handy whenever we need it. So anyhow, at the end of the day, I love this strategy. I think the biggest problem is most people don't know how to implement it properly, or they just don't know about it. So if you have any questions, please feel free to put them in the comment, and we're certainly open for business. So if you need some help filing your taxes for 2024, reach out to me and we'll be happy to help. Thank you so much, and I'll see you next time. Bye-bye.